GM, let's do a top-down analysis of the market, starting with Bitcoin. We have the 50-day EMA up on screen, this purple line here. As I mentioned, when you get super overextended below it, you're set for a mean reversion rally because, again, even downtrends have bounces, guys. So that's exactly what we're seeing play out here. Starting to trade into this daily gap. That can fill in pretty quickly, especially when you have a catalyst like the government reopening. They've made a deal to end the shutdown. It's going to take a while to get that deal through, but it's a positive for some liquidity catalysts, which I dived into last night in the weekly outlook video. I'll pin that in the comments now, but looking at the daily levels today, I would expect Bitcoin does continue rallying into this gap here before maybe rolling over after. We'll have to see, because this 50-day EMA, that's been our rejection point. And while, yes, bears show up there, when you get overextended below it, that typically leads to rallies back into that EMA band, because price generally, in mean reversion, wants to trade around the mean. That's why it's called that. So bias has been, since these lows over here, to look for a reversal, and we're seeing that reversal play out here, trading into this daily gap. Do we actually start to flip that 50-day EMA? If so, then sure, maybe we can look at rallies for even higher. You see this band start to flatten out over here. When you see the band start to actually go flat, that's when you're more likely to flip from whatever period you're in, whether it's downtrend into the opposite, an uptrend, or vice versa, uptrend then into a downtrend. So right now that 50-day is down sloping, but if it starts flattening out and we break above it cleanly with a nice gap and hold, then maybe we get something like the green path. But expectations would be for a rally into this 50-day EMA before seeing some sort of sellers show up, where we then have to reassess the market. And bias is, of course, for this to all be continued distribution since we've broke down from this. So that's what I'm looking at. But there's opportunities everywhere, both long and short. So maybe that does set up a short later on, and I'll dive into that setup today. Make sure you stick around in this video. Got a bunch of setups because right now we are in a Bitcoin long, guys. We reclaimed the 50-week EMA after losing it. This was the exact setup that I've been mentioning to you guys for some time in the Discord, in all my videos. So I had two scenarios. Either we sweep the lows, didn't get that. Second scenario, this is why you always have a plan for both scenarios. You don't want to just be locked into wanting a sweep of the lows, and if you don't get them, you stay sidelined. No, if you have multiple plans, multiple scenarios, that way you don't have to miss out on the moves, because you're being objective. You're not telling the market what to do when you have multiple scenarios, multiple trading plans, because a lot of people would have been waiting for that sweep, which is exactly why we've seen number two reclaim the 50-week EMA with a H4 close, trigger for me to get long. So that was the setup. That was the chart at the time that I showed to all of you guys. It was either one of these two trades. We got this one over here. Didn't sweep the lows. So that is Bitcoin. Closed above. On the weekend, I got long around the mid-range here and no target set. So this isn't my TP order, because things are actually looking pretty good for the bulls right now. You have the positive catalyst. You're going to see things like the TGA potentially drawing down if we do reopen the government. Scott Bessent's, the US bank account, essentially. You've got QT ending December the 1st. You've got potentially these tariff revenue dividends. Are they going to be paid out in some form, whether it's tax cuts, some sort of relief? It's all liquidity positive for the markets, because it puts more money in businesses and consumers' hands, which flows into markets, more disposable income. And the best part is we're seeing price agree. Price bottomed out here, couldn't sweep the low and give everyone that beautiful setup that they wanted of that clear sweep. Instead, reclaim the 50-week EMA. That told me to get long. And now we see on the daily here, on this higher time frame range, we are getting above this discount zone. After pushing into the discount zone, remember, this is your high risk to reward long area, we are now pushing back above it. So that is your earliest sign of a reversal forming. The fact that we've dipped into the discount zone and now are closing back potentially above it today if the daily does go anywhere above 104.7k. So keep an eye on the daily close today. If it does close above the 0.75, early sign of a daily reversal forming here, which is good. And all else being equal, the targets would be mid-range at 108.5k. If not, the premium zone at 112.2k. And you put something on like the 50-day EMA to see where that's coming in. That's coming in close to this mid-range over here, and you have this daily gap that's been set. So could we see a rally up towards this area between 107.2k to 109.4k? I think so. I think at least the mid-range should get hit if we do close above the 0.75 today. That is the trigger, because then you're coming into this gap where you can start to trade into it pretty quickly because order books were thin over here. That's how gaps work. So far, so good. The range I mentioned to you guys is playing out beautifully. That's how simple trading can be, guys. Get short at resistance, at high risk reward premium zone above to the deviation level, and get long at support, at high risk reward discount zone to deviation level over here. And you look for your setups on low time frame, building a system as I teach you guys in the school, and you get yourself actually long on a lower time frame, something like the 4 hour. That's one way I like to do analysis. High time frame analysis, then lower time frame confirmations. Because then you get a better entry, a tighter invalidation like this, where I'm now long, which would be the equivalent of somewhere in here. So right at the lows over here on the daily is where I am long from, with stop equivalent would be this Friday low over here. So this long is now pretty safe, which is why I removed my TP at 107.2k overnight, because now we're seeing potentially the higher time frames are now confirming my bias. So it started with the 4 hour bias, but now it's leading into those higher time frames, which tell me I should potentially hold this for longer. And the targets I'm looking at are as follows. So we've got some further gaps above over here. So let's remove this position tool for now so that you guys can see. Well, Sunday, Bitcoin gapped up and we've got nowhere near this gap so far. So that's a big show of strength on Bitcoin. We then had this gap above us, which we closed through. So exactly what you'd want to see as a bull. That's a show of strength when you close through a bearish gap, completely having no regard for it. That shows heavy demand. We're retesting it, holding it as support. So it looks like this move wants to go much higher than just these targets. So initially at 106.2 and 107.2. So I'd actually be looking at this gap over here. Of course, I'll mention to you guys in the Discord where I do take profit on this position, but I'm eyeing up the bottom of this gap as a 50% TP and potentially the full gap fill as a full TP, depending on price action, because again, that's going to come around that 50-day EMA. If I can get it up, 50-day, switch to here. That is currently around 110, so that will be coming down, of course. That could confluence, but generally now looking at the next gap above to see how does price react. Do we reject this gap, which would be different to what we're doing right now, which is trading through it, or do we actually just blast through this gap? If so, you close above this gap again, then you're looking at more of the same. That's a show of strength if you're trading through bearish gaps and flipping them into support. But alternatively, if you reject the gap, that's when you can then say, okay, we're seeing something different. Maybe this is actually where we need to pull back from. So that's what I'm looking at targets wise, watching this gap carefully from 108.2 to 109.4k. See how price reacts around it. Does it reject, or do we flip and hold it? And potentially then that might actually lead to continued rally higher to some of these levels above from this recent sell-off. So that's what I'll be looking at when it comes to Bitcoin. And if we check the order flow, it's been absolutely beautiful. You've got spot CVD at the bottom. So this is the market order on the spot side, perp CVD also at the bottom. So spot in red, spot in green, perp in red. And when you had this downtrend, look how much they were selling. They were pushing price down. But as soon as you got into this level over here, below 100K, where price didn't really want to be, you saw perp CVD set a low and then go lower, while spot CVD set a low and then actually set a higher low. And price, most importantly, set a low and also set a higher low. So the spot market and price was disagreeing with the futures market. And we know leverage, they get hunted, guys. It's not the perp market that drives the price. It's the spot market that drives directionally where Bitcoin's going to go, as that's the real underlying demand or supply. So when the leverage market is trying to fight what price is doing and what spot is doing, you see a reversal put in. This is a divergence. There's many different ways to look at divergences in Harmony that I teach, not just your classic RSI divergence, many more methods. And this was a bullish divergence at the bottoms, confirmed by price, most importantly. We've moved up, got nowhere near these gaps. So this is a little bit of a cleaner view of the gaps over here. You're seeing that Bitcoin's pushing above them, holding. Now, can we push above this gap and hold, or does this gap actually act as resistance? That's what I'm looking at next in terms of BTC. I think this range low, we can flip that pretty easily at 107.2K, given the strength in this move. So that's why I think this gap is actually more interesting. And the gap actually ends right at the high time frame SR. That's another reason why I'm looking at it to say, is this a potential TP area if it rejects? Because you got key levels over here on the high time frame where sellers have showed up previously, and likely levels for at least a pullback, if not potential rejection point in this rally. So how many legs has this rally got in it? Let's see by how price reacts to this area over here. Of course, if you just flip it and trade clean through the high time frame SR, then you look at 112K next as that pivot level, which held on so many occasions and got respected. So is that the next target if we can flip that? But a lot of work to do before then. Good to see positions rebuilding, open interest increasing. Now that we've started to put in some reversal here, means some interest is coming back in the market, which is exactly what you need and exactly why I'm continuing to stay long, because you do eventually need leverage to come in. They do still push the rally higher. It is important to have the futures market interested, and that can lead to the rally therefore continuing. So that is Bitcoin for me. Let's take a look at Ethereum. So these were the charts that I've been talking about for some time now. Morning markets, magic squiggle on Bitcoin played out perfectly. So GM to any of you squiggle lovers who created a system based off my paintings. Love you guys. You guys are the real warriors in the channel. But Bitcoin, what are we seeing? So this order block that I mentioned that previously led to selling on multiple occasions, we're now flipping it and haven't even back tested it as support, but traded cleanly through it over here. So again, another show of strength here in Bitcoin. The fact that we're pushing right through this order block here. And I think if there are going to be any pullbacks, perhaps when the New York session starts, there's going to be a quick liquidity grab. Maybe we push higher here, looks like price wants to, and then we go for a little flush before going higher. I think this general order block should hold, no matter how deep we go into it. I don't think we lose this order block, which we've now flipped bullish, because otherwise that sets a trap above this level and actually would be very bearish. So I expect on any dips, this zone between 103.5 to 105.2K to hold for continuation higher if you're lucky enough to get it. Otherwise, maybe we don't even dip into it. Maybe we do just consolidate here and break out. If so, I'm long, and that is how I'm playing on Bitcoin. But nice to see it blasted through this bearish order block, which previously found sellers. So demand is clearly outweighing supply at these prices. Bitcoin doesn't want to be below 100. Now, Ethereum, similar story. Well, remember the yearly open and 50-week EMA cluster of levels I mentioned over here? Well, we dipped below them, set that trap, came right into this demand zone that I highlighted here between 3K and 3.2K, wicked it perfectly on ETH. So that found support. We then reclaimed the yearly open. That was the trigger, guys. So I mentioned this trap scenario on Friday where you get people bearish right into this demand zone, these wicks over here, before reclaiming the yearly open. And then that's the signal to set up for longs. And ETH's blasted up ever since. Been very nice move here, and it's flipped its respective order block, which is good to see. Retesting it as support. So I'd expect something similar on ETH. Same principles apply. If we're going to see a dip whether it's today, tomorrow, whatever, I'd expect this order block between 3.458 and 3.586 to hold on any dips. And that should produce continuation higher, because if you lose this order block, then you're setting again that trap above the highs, actually trapping longs here, which can then catalyze a move much lower. So demand is here for now. Demand should hold on any retests within this order block. Can it go as low as here? Yeah, sure. But you're looking for this overall area, which we now flipped from sellers into what should be buyers on any retests on ETH. And targets can be higher on ETH. So this is the daily chart zooming out now, reclaiming that yearly open, now pushing up into the daily bands. So there are some gaps over here. Of course, we got this big daily gap, which can we trade into up to 3843? Maybe we find resistance there, or do we actually reach the high time frame SR at 4.1k? That's what I'd be looking at. Of course, the 50-day EMA has been resistance on ETH. So do we also see that setup play out again, where you see 50-day EMA be that rejection point that could confluence in the coming days around this gap fill? Or do we push above it for some higher targets like the high time frame SR and flip that like the green path? Then you're looking at continuation higher in this rally. So that's what I'll be looking at in terms of Ethereum. Similar setup to Bitcoin, of course. Markets are correlated. When we look at the stock market, a lot weaker than crypto. So that continues. You're seeing crypto strength, which is good low time frame. That means it's got the demand in this current rally. It's where you should be long, where you want to be long, but stock's not doing too bad. You had a distribution, then a redistribution, which crypto didn't quite have. Crypto didn't make new lows over here, which is the show of strength. So you've now got above that previous distribution. You'd expect this to hold on any bullish continuation higher, and this zone here to be resistance if we do reach it. And flip that, then you can look at the October FOMC level. Play it zone by zone, level by level. And gold. Well, gold, guys, I mentioned to you, was the strongest since last week's daily open on Wednesday. Pushed up, had some chop around the 4K October FOMC level, but eventually flipped it. And then we got this green path that I mentioned in the video. So I'd said if you flip this level, which was a previous trap sent before flushing price lower, smart money like to do this. They like to get everyone long on the breakout, trap a bunch of breakout buyers, flush it down, then reaccumulate and break above. And it's actually the second break is the one you want to be actually long on. And I mentioned once we get above this red line, that's the signal to look for longs on gold. And well, that's played out pretty beautifully. You've seen this lovely rally on gold since flipping this trap level over here. Very simple. Why? Because once you get above the level where buyers are trapped, they're now in profit. So that leads to reflexive price action. Buyers are going to long their longs, and it leads to continuation higher. And both my liquidity targets have been smashed on gold. GM to that. Anyone trading gold, 4.1k liquidity and 4.059 liquidity, both taken. Your next level is 4.2k. If we can reach that, it's been quite inefficient up, so I'd expect to see some pullback here. You're already seeing a rejection there, so if it can just consolidate and break out, expect continuation higher. If that does then break down and you lose some of these levels, maybe that is just going to be it for gold in this rally. And I'd be watching again the October FOMC level to see, do we find support there or not on higher timeframes from there? And that will dictate whether you're going to reverse or whether it's actually just going to bearishly continue lower. So that's gold, that's Bitcoin, that's the crypto market. These are what I'm looking at, trades from here. So obviously I'm in the long trade on Bitcoin already. That is over here. So get that long position tool out. I'm long, looking at the target of this order block over here, potentially looking for some shorts. If this 50-day EMA continues coming down and we get a nice gap fill, that would be a super nice confluence because you got two different technicals confluencing at the same time. So be looking at this short. This is from Trade of the Week on the weekly outlook video. Stop loss would go somewhere above that POC to try really catch a move like this. This would be the initial aim. If we can get a quick wick into it and rejection, I'll be looking for shorts. Now, of course, sometimes you close above it and have some price action above it before losing it. That would then be a second trade, which I'll update all of you on if that does happen. But initially, I'd be targeting a move with a limit order set if this 50-day keeps coming down, maybe tomorrow, maybe Wednesday. and it meets somewhere near this gap fill over here. I think that can be a nice confluence for a small short setup, whether it's a day trade or multi-day hold, for some rejection points. So that's what I'm looking at in the crypto market. If you enjoyed this video, drop a like, drop a comment, drop a subscribe. That lets me know that the content is valuable. I'll see you guys in the next one. GM.